Ladies and gentlemen, good day and welcome to Balaji Amines Limited Q4 FY22 earnings conference call hosted by PhillipCapital India Private Limited. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Apurva Shah from PhillipCapital. Thank you, and over to you, sir.
Thank you, Lizanne. On behalf of PhillipCapital India Private Limited, I welcome all of you to the Q4 FY22 earnings conference call of Balaji Amines Limited. We have with us today Mr. Ram Reddy, Promoter and Managing Director of Balaji Amines. I request Ram sir for his opening remarks, post which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, dear. Ladies and gentlemen, a very good evening to all of you, and welcome to the conference call to discuss the Q4 FY22 financial performance of our company, Balaji Amines Limited. I hope you have got a chance to go through the press release and financial statements submitted to the stock exchanges and uploaded on our website. First, kindly let me take you through the consolidated financial and operational performance for Q4 FY22. We are glad to have generated respectable quarterly results in an environment where the chemical industry is facing severe margin challenges due to rising raw material prices and other costs. We recorded 87% growth in total revenue, which stood at rupees 781 crore in Q4 FY22 as against rupees 418 crore in the corresponding quarter of previous year. Total volume stood at 33,780 metric tons for Q4 FY22, up by 18.2% as against 28,547 MT in Q4 FY21. For Q4 FY22, volumes of basic amines stood at 7,284 metric tons. Amines derivatives volume stood at 9,411 metric tons, and that of specialty chemicals stood at 17,085 metric tons. Greater volume uptake as a result of increased capacity utilization of our DMF and new ethanol plants contributed to the rise in revenue. EBITDA was up by 50%, which came in at rupees 199 crore in Q4 FY22 as compared to rupees 133 crore in the same period last year, with EBITDA margin at 25.50% in Q4 FY22 as compared to 31.7% in the same period last year. Despite the challenging inflationary environment, we were able to restrict the fall in our operating margins due to improved operating leverage from increased volume uptake and stronger price realization, especially for products of our subsidiary company. We expect operating margins to inch upwards in coming quarters on back of moderation in prices of key raw materials, favorable product pricing and better product mix going ahead. Profit after tax recorded an increase of 47% at rupees 131 crore in the current quarter under review as against rupees 89 crore in Q4 FY21, and PAT margin stood at 16.8% in Q4 FY22 as against to 21.3% in Q4 FY21. Diluted EPS for Q4 FY22 stood at rupees 33.56 per equity share as compared to rupees 26.08 per equity share in Q4 FY21. Now coming to our consolidated performance for FY22. Revenue from operations in FY22 stood at rupees 2,328 crore, up by 77% as compared to rupees 1,318 crore in FY21. EBITDA witnessed a growth of 68% from rupees 379 crore in FY21 to rupees 637 crore in FY22. Given the inflationary conditions, our EBITDA margin narrowed by 141 basis points to 27.4% from 28.8% in FY21. PAT for FY22 witnessed a jump of 72% to rupees 418 crore from rupees 244 crore in FY21. Diluted EPS for FY22 stood at rupees 113.71 per equity share as compared to rupees 73.52 paisa per equity share in FY21. Total volume stood at 115,349 metric ton for FY22 as against 106,057 metric ton in FY21, recording a jump of 9% for FY22. Volumes of basic amines stood at 24,999 metric tons. Amines derivatives volume stood at 37,170 metric tons, and that of specialty chemicals stood at 53,180 metric tons. Our subsidiary company, Balaji Specialty Chemicals Limited, continued to see strong demand as well as robust price realization. We logged sales volume of 4,903 metric tons in Q4 FY22 at our subsidiary plant as against 3,616 metric tons in same quarter last year and 3,887 metric tons in Q3 FY22. We have recorded the capacity utilization of about 56% in FY22. Accessibility for raw material required for manufacturing products, value-added products, pharmaceutical application, the manufacturing products of the subsidiary plant continue to remain a major challenge in FY22. However, the supply bottlenecks have eased, and we expect to operate the subsidiary plant at 70 to 80% capacity in FY23. Non-agrochemical clients constituted about 50% of total sales of ethylene diamine in FY22 from about 10% in earlier quarters of operations. We increased the share of exports from our subsidiary plant from 15% in H1 FY22 to 25% in FY22. And our endeavor is to increase it to about 30% going forward. We anticipate achieving annual turnover of about rupees 700 to 750 crores in FY23, and we expect the margins to sustain at the current elevated levels at the subsidiary level. The construction of new plant for dimethyl carbonate in phase 1 of Greenfield project Unit 4 is almost complete, and we hope to commence operations by the end of June 2022. With a few tweaks to the manufacturing process, this plant will be able to produce around 15,000 tons of DMC per year. The company would be India's only manufacturer of this product, with annual domestic demand currently ranging from 8,000 to 9,000 tons, which is currently entirely made by imports. DMC has major application in the manufacturing of polycarbonate. It is also used as a major solvent in the production of lithium batteries, the consumption of which will exponentially grow in India, backed by various government incentives. At the same time, we believe there is a potential for DMC to be exported to international markets. Additionally, this plant will also produce 15,000 tons of propylene glycol per year, which has major application in pharmaceutical and agrochemical industry. This facility will be able to generate revenue of rupees 3,300 to 400 crores per year at full capacity utilization. We expect our DMC facility to reach capacity utilization about 60% in current financial year 23. The demand of DMF continues to remain healthy, and with the completion of the bottlenecking exercise, the capacity utilization of this plant has increased substantially, the full impact of which is likely to be visible in FY23. In Q4 FY22, the DMF plant's capacity utilization was around 65%. We expect the capacity utilization of DMF plant to increase from about 42% in FY22 to 70 to 80% in FY23. In terms of our future expansion goals, we plan to begin capex under phase 2 of our 90-acre greenfield project for the installation of the following plants in FY23 and FY24. Number 1 is a new N-butylamine plant with a capacity of 15,000 tons per annum. Number 2, acetonitrile plant with a capacity of 15,000 tons. Number 3, methylamine plant with a capacity of 40,000 tons. And DMF plant with a capacity of 30,000 tons. The total capex over FY23 and FY24 will be about 300 to 400 crores. The production at the above plants will commence between mid FY24 and till end of FY25. N-butylamine is a new product that will be introduced to our already diverse product offerings. And N-butylamine is an ingredient in the manufacturing of pharmaceuticals, API, dyes, water treatment chemicals, pesticides, and emulsifiers. Annual domestic demand is estimated to be at 8,000 tons, which is currently met entirely by imports. We will manufacture acetonitrile at our new facility using a new improved technology which will provide us a cost advantage and allow us to address the impact of increased acetic acid prices, enabling us to maintain healthy operating margins. By the mid of FY24, this plant should be operational. Methylamine is a key raw material and the base product for value-added derivatives required by pharmaceutical and agrochemical companies. We are currently the market leader in methylamine production in India, and 80% our methylamine production is captively used for manufacture of value-added products. The pharmaceutical application segment and agrochemicals are expected to drive significant demand for methylamine in India as well as global markets. To meet our increasing captive requirements, we plan to set up a separate plant for methylamines with capacity of 40,000 tons per annum, for which the company has already received environmental clearances. We aim to construct up a separate facility for DMF with a capacity of 30,000 metric tons under phase 2 expansion based on the existing scenario, which suggests the growth of API and pharmaceutical industries under the Atmanirbhar Bharat package. The annual total domestic demand for DMF in India is about 90,000 tons, of which about 70,000 tons is met by imports. In India, demand of DMF is increasing at a rate of 7 to 10% per year. In the coming quarters, we expect to see an improvement in capacity utilization of our legacy products due to easier access to raw materials for matching products at our client's end. In FY22-23, we expect substantial improvement in volume uptake from improved capacity utilization of our ethylamine and DMF and acetonitrile plants, as well capacity additions on account of our new DNC plant. That's all from our side. We now leave the floor open for question and answers.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. first question is on the line of Dhaval Shah from Swan Investments. Please go ahead.
Yeah. Hello?
Yeah, Mr. Dhaval, go ahead.
Hello, sir. Congratulations, a great set of numbers. Sir, just reiterating from our last conversation we had.
Mr. Shah, we are not able to hear you clearly. Your voice is sounding very muffled.
Okay. Hello, is it fine now?
So, can you use the handset mode while speaking and not the speakerphone?
Okay, I'll just come back in the queue. I'll just take the end. I'll come back in the queue. You can just take the second other question.
Thank you. We'll move on to the next question. That is on the line of Dhaga Shah from Motilal Oswal. Please go ahead.
Hi, good evening. Excuse me. So, which are the products, sir, which are facing raw material supply issues?
So that is only the subsidiary plant. One is the monoethanolamine. I think now it started easing out. I think in the coming quarters we should be in a position to get sufficient required raw material. And the other one is ammonia. Prices have gone up, but we are getting availability has become easy now.
Okay. And so this year the revenues for the subsidiary have been close to 500 CR. So, and you've still mentioned that next year the capacity expansion would increase. So is the understanding correct that the prices would go down as raw material costs moderate?
It may be. See, present we have almost 500 crores at the capacity of 56%, right? So if we reach 70 to 80%, so we are saying we between 7 to 750 crores. And then there may be correction of some 5 to 7% of the prices also. All put together, we have given the guidance of 700 to 750 crores.
All right. All right. That's all from my side, sir. Thank you.
Thank you. Thank you, dear.
Thank you. The next question is from the line of Rohit Nagraj from MK Global. Please go ahead.
Yeah, thanks for the opportunity and congrats on a good set of numbers for FY22. So the first question is on methanol. How has been the availability amidst the challenges in terms of gas price increases which are happening in Europe? So are we facing any challenges from pricing as well as availability perspective? Thank you.
See, methanol is not, anyway, it is not sources from Europe. And availability is there. Only the price was the issue. But I think the price is also, we feel that it is stabilized around 30, 31 rupees. We have seen last 3 months we are seeing this price. Below is 28 and up is 32, 33 rupees. I think we should feel that it is stabilized at 30 plus level.
Right. So the similar question on ammonia, the prices have increased. And have we been able to pass it on completely to the customers? And are there any issues in terms of volume uptake because of the increased prices of our products? Thank you.
We are in a position to pass on. It is actually last quarter there was an impact on the margin because of it is a transit period for the passing on the increments. So now it is that phase is completed. Now we are in a position to passing on this, and the availability also became little stable now.
Right, got it. The second question is in terms of operational parameters. So how are we placed from the HSE perspective that we are producing most of the solvents, and given the current temperature conditions, and we've been hearing a lot of incidences happening in the industry, how are we placed for our facilities from the safety environment perspective? Thank you.
Thank you. Thank you for your valid question. And yes, we are much alert. Not only now, we are seeing very unfortunate that seen a couple of incidents in the industry. And we are right from the initial itself, we have the number of controls in the various places in the plants. And definitely we have all the systems on place for the safety point of view. And, secondly, in the environmental point of view, yes, as we said earlier, all the sites are zero discharge plants. So we are maintaining to that, and we can say that we can maintain forever these type of things. Normally, whenever we select the products, we look all these points. One is the safety, and second is environmental. These are most important things for us while operating the plants.
Got it, sir. That's really helpful, and thanks a lot, and best of luck, sir.
You're welcome.
Thank you. The next question is from the line of Dhaval Shah from Swan Investments. Please go ahead.
Hello. Yeah, Mr. Ram. Hello.
Yeah.
Yeah. Hi, sir. So just So, question on acetonitrile. INEOS Nitrile is expanding acetonitrile capacity in Germany by 15,000 tons, and they and the management says that they wants to get the acetonitrile production back to Europe, which had shifted to Asia some time back. So what are your thoughts on this? Does it create an overcapacity kind of situation in the global market? And yes, just your thoughts, because you are also expanding on acetonitrile.
Yeah. See, there's a growth is also there. We must realize that what is happening around world growth point of view. That is number one. Number two, I think earlier also I said, earlier people used to take this as a final solvent while doing the API. Now the people have started, because its availability and it's user friendly, and normally they call it as a rich solvent.
Yes.
There is every possibility to have the rapid growth in the solvent of the API industry. If any new molecule comes, definitely someone will prefer to go acetonitrile instead of going for any other cheaper solvent. So secondly, as regards our capacity, why we are coming, as I said, we have a totally different technology, and we will have the price advantage. Definitely, we don't see that the current competition and all those things. We will be definitely comfortable with our price once we start this new technology. So the reason we are not very keen to expand the old plant, we are sticking to that only 12 tons capacity. We are continuing that till we get this new plant. We want to test this new technology. We want to prove ourselves with a very competitive pricing. Then we will think of any new expansions on that.
Achha. Okay, great, sir. So secondly, now in terms of our volume growth for FY23 and FY24, this 150,000 tons is what we remain confident for the next year.
It should be only 115,000 is the actual figures, and we are coming up with the new, we are talking about the DMF full capacity utilization in the coming years. Ethylamine, we have seen only 9 months in the past year. Current year we will see full capacity, and DMC, propylene glycol, both are coming in the stream. So definitely we will see better, more than 115. We should see same like 10%, 10 to 15% minimum growth in this.
Yeah. Okay. And sir, how is the trend in terms of the spreads and the EBITDA per kg what we are making currently? Because we are one of very few companies, especially in this quarter, where we have maintained, very, very healthy EBITDA per kg. So, and we hear that some prices have started correcting overall in chemical basket. So, what is your thought process in terms of, over next couple of quarters, what sort of EBITDA per kg trend do you see? Can we maintain it near to this level, or how do you see the different spreads across your product basket?
Thank you. Thank you, Mr. Dhaval. These are actually I can say the good numbers in the bad period, right? So what we can say is this is only happened when you have the multiple products of basket. See, one product is not doing well, then other product is helping you. That is a speciality with the Balaji Amines, where we have number of products and number of applications of the products. That is how it is helped us. Going forward, yes, you are right. There are some pressures, but at the same time, we are coming up with the new products also, which are introduced this year, which are coming in the coming years also. Definitely, as I said earlier, 24 to 26% EBITDA is sustainable. And as I said earlier, in our case, you cannot calculate per kg EBITDA because our product mix is much different than any other company.
Yes.
Right?
Yes.
Yeah.
Yes, sir. So, sir, now in terms of using methylamines captively, like 4 years back, we were at 30% captive usage. Now we are at 80% captive usage. So this shows, while our volume growth has not been that huge in last 3-4 years, but our EBITDA per kg has improved because of a large, move to the value-added product. Now,
Yes.
say over next another 2-3 years down the line, post our capexes are over, will we be at same 80-90% captive utilization of methylamine?
It should go because that depends upon the both. Especially when we are talking about the DMF and methylamine plants. The methylamine plant total capacity will be utilized for our DMF and for some of our existing unutilized capacities of the derivatives.
Okay.
So there will not be much of volume going out from the methylamines. Maybe very nominal, about 10 to 12,000 tons may go out for the marketing directly in the methylamines. And as regards the new products, yes, that DMC and your propylene glycol alone, that volumes definitely will be adding for the total existing capacity of the volumes.
Okay. And so last question, sir.
Sorry to interrupt, Mr. Shah. May we request that you return to the question queue? There are participants waiting for their turn.
Sure.
Thank you. The next question is from the line of Kishan Gupta from CD Ecosearch Private Limited. Please go ahead.
Yeah, hi, good evening.
Good evening, Kishanji. Go ahead.
Yeah. So, given this volatility in raw material prices and short supply of some materials which you have talked about, so how much do you think your backward integration has helped in scaling your business?
The real numbers are saying, Kishanji, because in the bad period also we have done better means because of our product mix and backward and forward integration has helped us a lot. In one step, bringing a raw material, doing a single step will not be much competitive when you do the number of steps. Suppose if you talk about one of my product, N-methyl 2-pervilone, we do from the BDO. We buy the BDO to GBL, GBL to NNP. This is the 2 steps we'll do where you get the leverage of the margins. Yeah. See, volatility is not with us. It is with the entire world is facing the situation today. And we can say we are in much advantageous stage when comparatively the European countries because we are more dependent on the gases for the from Ukraine and Russia. We are well aware that what is happening with those 2 countries and how it is impacting the Europe. We may be impacted indirectly, but definitely we are at an advantageous stage in the availability point of view.
So, has your integration increased over the years, like what it was 5 years back?
I did not get your question.
So the level of backward integration, so has it increased over the years for you, like what it was?
We defined before going for the integration. It's not happening that without having any master plan. Just now, as I said that we are going for the DMA and DMF means it is integration between both the plants. The DMA plant is built for the manufacturing of DMF. So these are only planned. It's not unplanned integration. Right. So these are only 1 or 2 steps, not very major this thing.
And you have talked about growing your exports both in subsidiary as well as the standalone. So will it be from the existing markets or newer markets?
both. Existing also sometimes we are getting the advantage, but like today, China is not in a position to reach some of the parts of the world where we are getting some advantage in exporting our products to that particular areas. That is one area which is existing, I can say. And new which are coming up, like just now I said, the DMC, we have a lot of opportunity to go outside country, and we are talking about new product that N-butylamine, that is also there's a lot of opportunity to go outside country. With all these, our main aim to reach at least 30 to 35% of the total revenue should be from outside country, which will help in having the natural edge for any of imported raw materials.
Mm-hmm. And you've also...
Gupta, sorry to interrupt, but may we request that you return to the question queue? There are
Not a problem.
participants waiting for your turn. Thank you. The next question. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is on the line of Ishmohit Arora from SOIC LLP. Please go ahead.
Hi sir, congratulations for a great set of numbers. Sir, just had a question. What is our current capacity utilization of ethylamine?
We are the new plant which we have done almost using about 80% of the capacity utilized as of now. So it is just start of the year, last year we have done only 9 months, but this year we feel that we should be in a position to do now 80%, and going forward we should do 80-85% for the by end of the year.
Right, sir. And just one question on the products that you've been launching is that on dimethyl carbonate, what is our right to win in export markets? And secondly, in acetonitrile with the technology we are coming up with, so is this first of a kind in the world technology, or someone else is also manufacturing using the same technology? Thank you, sir.
I have not seen if anybody is manufacturing, but for out domestic nobody is making it. But outside country, yes, definitely one or the other people must be using the similar technology. But for the country, it is the first time. And which I think we will be producing DMC and propylene glycol together. The total capacity, I think I have cleared. I don't know how many people understood. The total capacity of this plant will be 30,000 tons, out of which there will be 15,000 tons of DMC and 15,000 tons of your propylene glycol.
Okay. And so what is the volume growth guidance for FY23?
Sir, may we request that you return to the question queue?
No worries. No. Thank you, sir.
Thank you. We'll move on to the next question. That is on the line of Naresh Vaswani from Samiksha Capital. Please go ahead.
Yes, sir. Congratulations on great set of numbers. Sir, in EDA there were some force measures by some of the players. So I wanted to know how is the situation now, because that had led to increase of EDA prices. And on DM,
yes,
you can explain what is driving this very strong demand, because
sorry to interrupt, Mr. Vaswani, your voice is breaking up.
Yeah, am I audible now?
Yes, sir. Please.
Yeah. Go ahead.
Yeah, and DMF, if I look at the last 4-5 years, so this year our utilization has suddenly started to pick up. So I wanted to know what is driving this demand in DMF this year, and particularly next year you are guiding for almost close to full utilization, and we are also expanding. So these 2 questions here.
See, EDA, I can say you are right that outside country there are, that is Europe, 1 or 2, maybe 2 to 3 plants are in the force majeure. Reason is well known that because of the gas availability from the Ukraine, even natural gas shortage in the European region, that could be the reasons. And yes, it is continuously demand. Even now also same demand is trend is going on. We see that next visibility, next 3 to 6 months, we can see the similar demand for the EDA. As regards DMF, you are right. Even we also want to know what went wrong with the DMF. We have waited for 6 months with this demand, and the reason we have taken a decision that at least in India, we need more than 90,000 tons, 96,000 tons of the consumption of this particular product, and we have only existing plant is 30,000 tons, out of which we were doing only 20,000 hard. Probably this year we will do total 30,000 tons, and coming year we are looking for this existing demand is 96,000 plus. If you take some 6 to 7% growth also, it will cross 100,000 tons. So even after adding our additional capacity of 30,000 tons also, it will be only 60% of the country's demand. I am not talking about the world's demand. So definitely there is a room. So there's a reason the decision taken by the management to go with the second plant of the DMF.
Right, sir. But if I mean, this demand was.
Mr. Vaswani, sir, may we request that you return to the question queue? There are participants waiting for their turn.
Oh, okay.
Thank you. The next question is from the line of Amar Maurya from Alpha Accurate Advisors. Please go ahead.
Yeah. So thanks a lot for the opportunity. So I have two questions. Number one, EDA, I believe your utilization had also gone up in this quarter as well as the prices, obviously the prevailing. So sir, is it like, your competitors' cost of production, like, majority of competitors were European and their cost of production has also gone up. So because of this, these prices are there for EDA, and till the time situation doesn't normalize, this kind of prices can continue. This is one. Second question is DMC, as you said that 150 crore can come from DMC. So the byproduct which you are saying that can contribute another 150 crore. So the total project will contribute 300 crores of revenue. These are two questions from my side.
Yes, EDA, you are right. Currently situation is same as I said in my earlier answer, and it will be continued. At least to me, the visibilities of the next 2 quarters looks like this in the price point of view and as well as demand point of view. And for your second question, DMC and propylene glycol together, if both runs at peak level, I think I have given the guidance of 300 crores.
Okay.
That 150 crores, what 150 crores, what we talked about, current year part operation.
Okay, part operation. Okay.
And even lower part operation, lower capacity utilization because being the first year.
Okay, got that, sir. So overall project will contribute 300 crores.
Mr. Maurya.
Okay, got that. Thank you, ma'am.
Thank you. The next question is from the line of Anshul Verdia from Edelweiss Wealth Research. Please go ahead.
Good evening, sir, and congratulations on good set of numbers. Am I audible?
Sorry to interrupt, Mr. Anshul. Can you speak a bit louder? We are not able to hear you.
Yeah. Is it audible now?
A little better.
Yes.
Yeah.
Thank you.
Yeah, sir, congratulations on a good set of numbers. Just a couple of my questions. First, on the butylamine plant which we are planning. So I see we are putting up 15,000 tons of capacity. So where these additional volumes, apart from the domestic, you think would be absorbed? And what are the key raw materials we are looking for producing this particular molecule?
Again, here the raw material is butanol and ammonia. And butanol is available in the country. There are 2-3 manufacturers, and even import also available like a commodity product. And in the country, as of now, the consumption is almost 8,000 to 9,000 tons, which is totally imported. Apart from this, we have seen around the world there is a good demand for this product. Probably part of our production will go for the exports. Out of total 15,000, in first year of operations, we may do around 60-70% capacity utilization, whereby by the time we reach to the 70-80%, the even country's consumption also may go up. The way the things are happening, but the new molecules and the new things are happening, we feel that there should be some incremental growth in coming years in the butylamine also.
Thank you. Just a follow-up, sir. Can you give me some ballpark asset turnover over the new capex which we have announced, the 4 new one? And on the DMF, we are saying that we will be running on the improved capacity. So is it fair to assume 80 tons per day for 300 days for DMF?
Yes, we should. If everything goes well, subject to raw material availability, of course, that is available as of now. But
for DMF.
If everything goes like this, definitely Yes, we will be doing 80 to 90 tons per day.
Okay, and so any ballpark asset number for the new
Sorry to
capex?
interrupt, Mr. Anshul. Sir, may we request that you return to the question queue?
Sure, I will. Thank you.
Thank you. The next question is from the line of Jatin Damania from Kotak Securities. Please go ahead.
Thank you for the opportunity. So the question on the subsidiary, now we are guiding that probably we'll do 700-750 crores of revenue in next year. So beyond 750 crores, what is the company that we are looking at to, another molecules that we are going to add in the subsidiary that will drive the growth? The first one, and second again on the subsidiary. That's a couple of quarters back that we had indicated that as a company we had formed a credit committee to evaluate the options in terms of merging the company with Balaji Amines. So what's the status on the same?
So that number one, regarding the new, we are talking about today is only 56%. And coming year we are talking about 70%, 70 to 80%, whereby 700 to 800. If it goes to 90-95%, I think it should reach to 1,000 crores. And we are working on the debottlenecking. We have seen some opportunity doing some debottlenecking that we are evaluating. We do some equipment adding, and probably this capacity may grow another 10 to 15% in the existing 40,000 ton. That is number one. We are also looking the opportunity if we can do some derivatives by adding some small equipment. That is also we are doing it. As regards to the committee and merging and all, there is a subsidiary board is evaluating the options for doing this debottlenecking and other things, fundraising, whether we can do some fundraising or whether we can do emerging, whatever. They are working on it, and the board will evaluate, and you will hear in the coming 1 or 2 quarters, you will hear the exact what is going to happen.
Okay, so as of now, we are focusing more of EDA only, where we'll be doing a debottlenecking, and that will probably drive the revenue for next 2 years, beyond which the derivatives will come in place.
Yeah, you are right. Thank you.
Okay, sir. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 1 per participant only. The next question is on the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello, am I audible?
Yes, go ahead.
Good evening, sir. Congratulations on a very good set of numbers. I just wanted to ask, around roughly, we did nearly 780 crores revenue this quarter. So what can we think about in terms of FY23? Will this run rate sustain, or can we even do better with new capacities coming up?
Current financial years, I think in standalone we should be in a position to touch 22 to 2300 crores, and consolidated we should be in a position to reach 2500 crores.
Thank you. The next question is from the line of Tanvi Bhandari from Hem Securities. Please go ahead.
Hello, sir. Sir, just one thing. Can you just continue the same question? Can you give guidance for your EBITDA margins also on a consolidated level for FY23? That you guided a top line that will be able to touch 2,500 crores, and also in 2,500 crores, to what extent would be the additional revenue that is coming from the new capacity?
See, this 2,500, just now I think in my earlier questions I answered. One is the full capacity utilization of DMF and full year operation of ethylamine, and the new products like DMC and propylene glycol sales from the next quarter onwards, almost 9 months, 8 to 9 months will be available for these. All these things will add to the revenue of the current revenue. Second thing, yes, we should be in a position to do minimum 24 to 26% EBITDA. We should be in a position to maintain. The reason whenever we do any new product, we need to do some aggressive marketing to catch up the market. That time, in the first year of the operation, first year of the entering into the market, we will have little lower EBITDA. But definitely, in the following years, we should go this whatever we are giving now, 26-27%, should be in a position to maintain.
Thank you. The next question is on the line of Anubhav from MC Pro Research. Please go ahead.
Hi, sir. Very good evening. My question is a little generic nature. I wanted to understand on the end market part, both key end market, agrochem and pharma. What are your views on the demand side? How are they holding up? I mean, how is the channel inventory for both? Are you seeing any case of overstocking in some areas? So maybe on absolutely or relatively, if you can give some view on that.
Thanks for the specific question, even though it may not be fully related to our company, but I just would like to share whatever little knowledge I have from the day-to-day working market. What has happened this China lockdown? It is, I think, almost 6 to 8 weeks is passed for this lockdown. Because of the volatility, people started maintaining the 1.5 to 2 months inventories, I think, which have been completed. And the lockdown started. That time, the people who would have booked the material would have arrived now, this month, maybe this week or maybe next week. That period has come. People have started pinching that non-availability of booking and non-receipt of the material. Majority who are depending on the China, at least in the India, even outside India also, all over world, the people who are depending on the China will be pinching more of the effect of this lockdown. For our company, it may not be direct impact. There may be some indirect impact because of the matching raw material availability. But going forward, with the government encouragement, with the PLI scheme, Atmanirbhar Bharat, many people are working on this alternate products and removing the dependability on the China. That will definitely help in coming years. But this quarter, definitely, the pharma and agro will be having some pressure to some extent. This is my personal view.
Thank you. The next question is on the line of Puneet Mittal from Global Core Capital. Please go ahead.
Hi. Thank you, Mr. Reddy. Just two quick questions. One is the CapEx that you are planning, is it all from internal accruals? And second, more importantly on the DMF, how big is the risk of, a few years ago, China was dumping quite a lot and so there was a lot of price pressure. How big is that risk now going forward?
Okay. I think number one question is, I think I already answered in my opening remarks saying that majority, I'm saying majority of the capex will be internal accruals. Maybe few crores at the lag end of the completion. If required, we may go for some borrowing. But otherwise, as of now,
ladies and gentlemen, the line for the speaker seems to have got disconnected. Please stay connected while we reconnect the speaker. Ladies and gentlemen, thank you for patiently holding. We now have the line from Mr. Reddy reconnected. Over to you, sir.
Hello. I think it's Mr. Puneet Mittal's question, right?
Yes,
Yes, correct.
Number one, this is regarding risk on the DMF you asked, right?
Correct. Yeah.
See, DMF, China, that's the reason we have waited almost 6 to 9 months to understand whether the China will take U-turn or how long they will do like this, or whether they will again re-enter with the new prices lower. But we could see that this is not a temporary. The people understood realistic price is this, and maybe some of the plants, because of the gas prices all over world, including China, have come to a realistic level. Because I want to tell you one thing: all the plants in China and other places, their CO is produced with natural gas. The natural gas around world is come to a particular price. I don't think that will come down. Whereas our CO's manufacturing is based on the CPC, calcinated petroleum income, which is available in the country, and which is not likely to go that high. What is happening in the natural gas? So that is one thing. Second thing, the capacity point of view. As of now, the 96 to 100,000 tons is the country's consumption, and we are talking about this new plant coming up in coming 2 years. That is 2024 means another 2 years. We can add another 20,000 tons of growth in the DMF consumption in the country, whereby the total demand will go to 120 to 125,000 tons, and we are talking about 50% of the capacity. That is 30,000 existing and adding 30,000. So that means it's not a big risk, it's a very calculated risk.
Thank you. The next question is on the line of Vinayak Muhutta from Stallion Asset. Please go ahead.
Yeah. Hi, good evening, sir. Congratulations on a great set of numbers. I broadly wanted to just understand, the growth numbers that you have been talking about. Like, you have done 2,300 crores in this year, and you'll be moving towards 2,500 crores in next year. So is this because of the higher pricing realization that has come through, or is it also and lower volume growth that you had in the current year? Or like, I'm just trying to understand, there is so many capacities coming in, how would the growth number be so low? Also, just wanted to understand, where do you see the company moving, in the next 3 to 5 years, given you'll have multiple capacities coming on stream and you'll be announcing more capacity rather than when they come due. So, like, what is your vision for the company for the next 3 to 5 years, sir?
You are right. You can take that as a conservative point of view. I have taken this 2,500 crores because one can easily calculate that there are the new capacities adding in this year, and some of the low capacities and plants will be running at higher capacity in the current year. Definitely, one can understand it should be more than 2,500 crores. But you are right that some of the products, maybe because of the raw material price and finishing product price is higher, those may come down, even though your bottom line may not impact, but revenues may impact. There's a reason 2,500 is correct. The answer for your second question is, as regards the coming 2 years, yes, the total, I think we have taken up 4 plants. Half of the part of the work is already done. One is the N-butylamine, number 2 acetonitrile, number 3 methylamine, number 4 is the DMF. All these 4 plants will be commissioning one by one in coming 2 years. The commencement of production will complete all the products by end 2025. The moment we operate all these existing plants and these 4 plants, we aim and we dream our top line should be around 4,000 crores.
And that would be around FY26, like broadly?
Sorry to interrupt, Mr. Mohta.
25 to 26, yes.
Understood. Perfect. Thank you. Thank you so much. All the best.
You're welcome. You're welcome.
Thank you. The next question is on the line of Anurag Patil from Roha Asset Managers. Please go ahead.
Thank you for the opportunity. Sir, what are the current prices of DMF, acetonitrile, and N-butylamines? If you can.
The DMF price was 190, but it has come down to 170, 165 to 170 level is there as of now. And acetonitrile it came down to 245 to 255. And N-butyl it went up to 400, 500 also sometime back, but it is somewhere 180 to 200 rupees presently.
Thank you. The next question is from the line of Deepen Sheth from Buoyant Capital. Please go ahead.
Yeah, hi, and thanks for the opportunity. I just wanted to ask a question about the balance sheet, particularly when I look at the receivables that show up this year. They seem to be a little out of whack and disproportionately higher versus last year, even accounting for the rise in revenues. So any color on that? Can you give us some insight?
I can tell you, so you might have seen the some of the creditors for the expansion also will be there. I have to check. And proportionately, if you see the sales have been increased. Last year sales, if you see, 1311.46 total year, and current year is 23,320 crores. I think proportionately it should be in track only, but still, if you can drop a mail, I can give you the total exact picture.
Sure. And about
Sorry to interrupt, Mr. Sheth. May we request that you return to the question queue? There are participants waiting for their turn.
Right.
Thank you. The next question is on the line of Amar Maurya from Alpha Accurate Advisors. Please go ahead.
Sure. So thanks a lot for the opportunity again. Just wanted to understand that, sir, this 2,500 crore guidance, this seems to be a very conservative one, given that, whatever we are...
I think, Amar, I have answered just one question back only. I answered for this. Yes, you are right. It is little conservative only. Looking into the peak prices, we afraid that if the prices comes down, even though the bottom line may not impact, but the revenues may impact, and adding the new products will add. All put together, I have taken this conservative number of 2,500 crores.
Okay, but you're saying the EBITDA, absolute EBITDA value-wise will continue to remain same, right? So we should not focus on revenue, we should focus on absolute EBITDA value.
Yes, EBITDA and the EPS, if you look at that, there will be, that will be intact.
Okay, perfect.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for their closing comments.
Oh, thank you all. Thank you for taking out time and participating in our conference call. The overall outlook for Indian pharmaceutical company and agrochemical is expected to improve further as companies in Western economies support the China Plus One policy, and the pharmaceutical and agrochemical industries account for the vast majority of our end user clients' needs for aliphatic amines and specialty chemicals. Given the strong correlation between demand for our products and demand for products from our end user industry, we anticipate a strong growth potential for our company in the coming years. At the same time, we are constantly working to expand the diversify our product portfolio in order to address more segments of our end user markets. And thank you once again to all the investor stakeholders for showing confidence on our company. Thank you once again.
Thank you. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.